Our April monthly success report is out for 2017, and we had another great month, capping off a great year so far. I'll just give you the end slide. We are up 19.18%. We had an increase of 2.95% over the month of April. We had actually four really great trades. We had one losing trade, and that was on the Qs. We had a winning trade on the Qs, and we'll go over all of these, add them all up, and show you exactly how everything broke down. Let's jump first into the S&P 500. We had a weekly vertical crossover going down. Now that occurred back on 4/3. That was the 3rd of April. We jumped in at $235.93. Now remember, it was a down trade. So what you would do is buy into SH. And again, that is the inverse of the S&P 500. Instead of switching around to different charts, all we're doing is staying with our main four charts. This was a down trade, so it's supposed to go down. Now again, SH, of course, the inverse goes up, and it moves up at the same rate S&P moves down. So in other words, we're just going to keep it simple. So we went from 235.93 on the down trade down to 232.51. The inverse, of course, would have gone up. That means that our gain was $3.42, or most importantly, 1.45%. So that was a successful trade using our weekly vertical crossover method, which means, of course, when that weekly chart rotates over, we jump in that following Monday at 10:30. We had a successful down play through the 13th of April. And again, that brought in 1.45%, or $3.42 per share on the S&P 500. Let's go to the next one. That is the NASDAQ 100. We went from a high to a higher high. That previous high the month before was actually the last day of the month. It was on the 31st of March at $132.74. We then took it to a higher high on the 27th of April of $133.48. That was a gain of 74 cents, or 0.56% from point to point. Now, our losing trade for the month was the NASDAQ 100 again. This was on a weekly vertical crossover down. It was an end point on the 18th, that is 4/18, and we ended up having it go from 131.27 to 135.87. We had a weekly vertical crossover going down back on the 18th. And we jumped in, and we had a very short period of time where the market did go down, but then it popped right back up again. And what we basically did, in order, we thought, to fairly and not mess around with, when would you get out otherwise, we just went from the entry point on the vertical crossover going down to the 2-day crossover going back up. And that had us take a loss of $4.60, or 3.5%. So we just took the hit. There are a number of methods that would have gotten you out earlier than that, but we said we're not going to monkey around with that. We're just going to man up and say, hey, that was a losing trade. We'll take the hit on that. Okay, next one we move to is the 20-year bond fund, TLT. We went from a high to a higher high. It topped out on the 8th of February at $122.27. And again, we didn't monkey around and go from where it dropped all the way off to where it went up again. Oops, sorry about that. What we ended up doing is we went from the highest high all the way back in February to our higher high. Now, we could have argued around to have jumped in somewhere at the 2-day crossover or the daily crossover back in mid-March. We did not do that. We just went from the previous high to the higher high, and that alone was a gain of $2.71, or 2.22. So we are quite proud of that. And again, we're trying to be as fair as we can and not monkey around with these percentages or these endpoints. I mean, anybody can back trade and find what they should have done. We are not trying to do that. We want to show you that what we're doing works time and time again. Occasionally you will have a loss. You take that loss in stride and you keep moving up. What do we have lastly? We have gold. We had a previous high of $120.40, went to a higher high, and again that high was back on 2/27, February 27, went to a higher high on 4/18 of $123.07. That was a gain of $2.67, and again, just like TLT, it ended up being 2.22%. And again, we went from a high to a higher high. We didn't try to go monkey around with numbers and let it drop all the way down to a low point and then say, look at how genius we are. We just went from what we thought, as we have done throughout the course of the year, what is the most fair way to help calculate this. So where does that bring us? Well, it brings us to that second slide we showed you at the very beginning. We had a gain on the S&P 500 of 1.45%, had a loss on the Qs when you add in that short gain we had of about 0.5% minus the 3.5% loss that ended up being on the Qs, a minus 2.94% loss. We had another gain on TLT of 2.22%, gold, and again, TLT is the 20-year bond fund, gold, 2.22%. So our increase for April, when you take in all the winning trades and the one loss, 2.95%. We add that to our previous increases in January, February, and March. That was 19.18% for the year to date, my friends. We are very proud and happy with that. And that is just on raw numbers and share increase in price. If you are using our methods to practice trade options, of course, we could mess around with those numbers and have incredible results. And again, this 19.18% is not for an entire year. It is only for the first 4 months of 2017. And again, just for April alone, 2.95%. There's a lot of people who would love to have a CD that gave them that kind of yield for a year. That was just a month. So again, work with us, study with us every day, follow the charts with us, practice trade, and you will get the hang of this. It is the most important 10 minutes you spend every day. We appreciate you so much being with us. Let us hear from you. Always feel free to write us, cw@chartingwealth.com, if you're not already signed up for our daily newsletter. Doesn't cost you anything. All the things we do at Charting Wealth don't cost you anything. All you need to do is go to chartingwealth.com, put in your first name, your email address, and we will start sending you those charts along with links to our How to Read a Stock Chart video and the 3 worksheets we have. The trade worksheet where you keep up with your trades as you practice, your daily market worksheet that you fill out Tuesday, Wednesday, Thursday, and Friday, and then your weekly market worksheet that you fill out over the weekend for Monday. That's as easy as it gets. 10 minutes a day is all we ask. God bless. Take care from chartingwealth.com.